Cool. Good morning, everyone. I hope you're all well. It's Duncan here, Coach Dunk. So obviously, I know many of you will be tuning in for Celine and Nick. They're both actually off this week. I think Celine's moving, and Nick, a lot of the Tradeify team are getting together for a 1 year celebration of the channel. So obviously, I'm new to this this session, so I do appear in the futures session. So I'll give you a little bit of a different take. It's a shortened session today, so just a couple of hours. So please bear with me. I'm probably, well, I am the oldest on the channel, but I have a little bit more experience. So for those of you who don't know, and Nick's in the chat. Good morning, Nick. But yeah, for those of you who don't know me, I'll just give you a very quick overview of me. So I've been trading nearly 30 years. I spent 20 years running desks for banks in the UK. I'm based in just outside London. So I now work for a fund, do a little bit, I pop onto the streams every now and then, do a little bit of coaching sessions with Coach Tex. And also I certainly Monday mornings, always a big, let's have a look at what's going on in the markets, what's happened, what can affect the markets this week, what's the big things we're looking at. So obviously throughout this couple of hours, we'll dip into a bit of that, but also we'll have a look at the markets as well and see what's going on. Shaping up pretty well for the start of the week. So right now, okay, so let's just start off with what's coming up in the day ahead. That's probably at the start of the week. Now, obviously, one of the first things I'm looking at isn't necessarily always straight to the chart. I want to keep an eye on. I want to use my time on a first thing on a Monday morning to be looking at what's coming up in this week ahead. And for that, I'll always just jump to the calendar first. And I'm looking, what I really care about is these red ones. So today we've got the ISM, which is going to be probably the biggest thing to come out from stateside today. Obviously, that's going to bear significant importance as we work through the week. Really, I'm just looking for the ones in the zones. I strip this back to just the main kind of G7 countries. So one of the things we know, ISM on Wednesday, ISM PMI, Purchasing Manager Index, and then we've got the ISM services. So different sectors. This gives another little look of inflation. And then the big one, the one everyone gets excited about payrolls on Friday. But when we come, let's just jump back onto the chart. Let's just talk about where we are. Now, obviously, Friday was big day, another big day. The S&P finished last week around about 1.8% up. Nasdaq was 2.6% up. Already we can see the futures are ticking along nicely, all sitting above around about 0.25% to 0.5% up. Let me just catch up on the chat. See Nick's dropping in. He must be tired if he's out there. Someone's asking me if I sleep. If Nick's in Miami and awake, he's either had a very long night or is up very early. That jet lag's going. Coach Dunk, do I ever sleep? Yeah. So I mean, obviously, I come on the US sessions, but I've been out here in my garden office for an hour and a half, and then when I do the US sessions, obviously that's the tail end of my day. So, right. But yeah, we can see that the market's pushing up. Now, there have been a few bits of news coming out over the weekend. I'm sure you all keep up with what's going on. Now, obviously, we're still not quite there on a deal. And if you look at the, oh God, Nick's go, oh, of course, Nick, we've got the Grand Cup. We'll go through the Grand Cup in a minute. Nick is still representing the London stream in the competition, down to 4 outlaws. So Nick has a big day trading, so he may be away, but priority sits on the Grand Cup, I'm sure. We'll have a look at the Grand Cup leaderboard in just a minute, but always good to have someone from the London stream still representing the team in there. But yeah, I was saying, obviously over the weekend, we're led to believe they're moving together towards a deal. The fact is, we're not quite there yet, but the fact is they're speaking to each other, and the market is taking that as okay. But over the weekend we saw, I think, Israel pushed forces towards Lebanon, which is never good. We also saw a little bit of tit for tat US-Iran activity, but nonetheless the futures are continually, and that's what we're seeing at the moment. The theme is the market's continually shrugging these moves on, these moves off, and really I think if we have a look at what's the core driver of this upward move, it really is AI. So if we strip it back, the AI movers have been the big ones, and that's in my opinion that's what's pushing the market on. Obviously this morning we saw US oil, let's just click on that. We saw US oil have a few little blips. Again, we gapped up, and this is because of the activity we saw at the weekend. Now obviously we need a remedy in the Middle East to really get oil. Now last week oil had enjoyed a pretty decent week. I think it was around about 17% down. So I think, we have a, right, sorry, I think we have a lagging stream. I'm not sure if that's at my end, but yeah, this will be rectified. So I'll keep going nonetheless. I'll just type into the chat. Right. So a few people dropping in now. So just to reverse back, Nick is in Miami, although he's on the chat here. He's up and trading away, getting ready, preparing for his Grand Cup performance today. Celine is moving, so you have myself, Coach Dunk, here for the next couple of hours. But yeah, I was just going through oil. Obviously, oil did have that little pop, just 2.5% up. I think this week we're always going to be just hanging on the words of probably Trump and Iran. Trump was pretty quiet on it over the weekend, really. So now we have no sound. Look, Monday morning, typical Monday morning. That's how these things tend to go. Anything that can go wrong will go wrong on a Monday morning. So do just bear with us. We'll get that rectified shortly. But yeah, I was saying. Oh, okay. Right. Okay. Right. So right. Okay. Everyone can hear well. So perhaps a little bit of cheekiness going on. So we'll bear that in mind. Right. So as I was saying, oil just been that little bit more eager. This week we're still watching this situation. We're still headline driving now. Obviously, we want them to get to a deal. The issues over the weekend hasn't helped there. So let's just have a quick look at the charts. So NQ, I tend to, just to give you an overview. So in terms of my trading, I'm not often on a 1 and a 5 minutes. I'll be honest with you. I am an unbelievably simple trader, and you'll see that in a minute. Obviously, I've been trading a long time. When I first started trading, I actually worked on a trading desk for a bank, and nobody looked at charts. Nobody, not one person on the desk. And it was a 12-man desk. But bear in mind, this is like 1996. But slowly, I was one of the first to kind of start looking into technical analysis. Obviously, I just went for the send the kid on the course approach, and I ended up with just so many, basically everything new I learned, I just put on my chart, and it became so messy. And one thing I tend to do, I then did, was strip things back to what was actually working for me. So, and therefore I ended up I just use support, resistance, trendline breaks. That is it. The only other indicator I have in my charts are the 100 and 200 day moving averages. So they're not coming into play very often. So, but in terms of charting, I'm Mr. Simple. In terms of understanding of the markets, I'm a little bit better than that. But again, it's just about finding you. In terms of technical analysis, there's not really any right or wrong. There's just there's just what works for you. And again, I implore everyone to find their own path when it comes to technical analysis. You've got some great guys on all the streams, Nick, Celine, for those of you who participate in the futures and even the Asia session now. Again, everyone who comes online has a different way of doing it. Just look at what people are doing, try things out in your own way, look at external people, and then use that info. Ascertain what works for you in a time frame that's appropriate for you. So just looking at this chart, I'm just trying to look for something simple, that a trade that I'm just a line or a trade that I might like. So for me, again, this is just something I would pay attention to. Now, obviously, just to obviously we've got the. It's so hard when we're on all-time highs trying to pick the a target when there's nothing to look left on. But look, it's where we are. I've been here, been through this many times before. So for me, I will trade the fade of a. So I like this line. It's given me a good amount of touches, minimum 3 touch, arguably quite a few touches here. So this is the sort of thing I would look at. So what I would either be looking for is a break down through it, and then the obvious place to put a stop loss would be just above here, or if we come down, get close to it, touch. Now, in terms of trading a break of this highs, it's possible, but look, these aren't perfect touches. I like this line, and I would trade a break. Now, in terms of my short-term trading, I have to try and not be overly biased, because obviously when you're trading real short-term, whether I think the Nasdaq's going to end up another 2% up this week doesn't really come into it, because what I care about, I can still believe that, but if an opportunity presents itself in the short term, then that's what I would say. So in terms of, like, just to give you an idea of, if I was to look to take this short, now guys, I have to be very careful. I whenever I'm giving a trade idea, because I'm employed for a fund, and I'm regulated, I have to be very careful. I'm not giving trade recommendations. I'm just giving you an idea of the analysis that I look at. Let's call it that. Cool. DAX, oil and gold. Right, I'll come back to them in just 1 minute. Okay, let's just go. Celine changed a lot. Yeah, there's a yeah, Celine and I look significantly different. Do you look at liquidity levels for price action and liquidity grabs? For me, not so much. Now, in terms of liquidity, I find liquidity a bit difficult, because often what you get is I can't rely on the. I feel when I've looked at the liquidity gauges, I struggle to find it really impacts it in the way that I would like. So therefore, I don't really do it. But yeah, what I was saying, if I was to take a short on here, now guys, you have to just bear with me, because I don't use these. Now, I don't chart with with trading view. So just to give you an idea, this is the sort of thing I would look at. Now, my entry, obviously I've got this line here, could trade through that, but if we've got a couple of lows near it, I'll always just give it that little bit of room, because often when we break through a level, because I'm trading trendline breaks, the biggest bane of my life is fake breaks. Okay, so this is obviously I could sell through the level, but if I just use these couple of lows, because what I don't want it to do is just break through the level, base out around here, and then come back up. Now, obviously, if it did that, I'd be looking at it afterwards going, you idiot, why didn't you just wait for these couple of lines to go? So with regards to that, I just give it a little bit more room. Now, the stop loss is easy. My stop just goes above these previous highs. Simple. And target, again, not overly aggressive, but this is giving me a risk reward of at least 3 to 1. So if I just move that across, yep, 3.29 to 1. So again, this is just, when I trade, I will not enter a trade unless I'm looking to gain at least 3 times what I'm risking, because I'm not always right. Of course I'm not. I'm a good trader. I have been for years, but I'm fairly comfortable. I'm now comfortable with myself that I am not going to make money on every single trade, and therefore, with a risk reward, of 3 to 1, I can afford to be wrong. If I get two wrong, my third trade still makes me small profitable. Like, obviously, I like to think out of 10 trades, I'm going to get at least 6 right. On a 3 to 1 risk reward, that works. Cool. Right. Let me just have a look back through. Idris, am I on a minute chart? Yeah, I was just using a minute chart here just to give the example. So, Toro of the Woods, am I a trendline trader? Absolutely. That's entirely, yep, trendline and swing trading. They're the two. Right. Okay. Right. Talks of delays on chart, but let's see. I'll just keep pressing ahead because there's no other way I can do it. But yeah, this is just a simple way I look through my charts. Now, somebody asked me to have, apparently my chart is delayed. Right, 1 second. Right, sorry, I think because I need to update my trading view, there is a delay on my chart. So yeah, please just bear that in mind. So I should get that updated. I'll get that updated today. Cool. So yeah, okay, now someone said, let's have a look at oil. So this is crude. So yeah, we buy House UK. Did oil gap up overnight? Now, yes, it did. We obviously we can see the gap here, and this is because of we saw Israel pushing towards Lebanon, and obviously a bit of tit for tat battling from the US and Iran. Now that just gave, obviously oil had a very good week last week. We come back down, and then we came off. Now, Tunkanata, not a real trader if he's working off delayed charts. What a faker. Now, it's actually the opposite of that, to be honest with you, because I use Bloomberg charts. Obviously, that is what we use. And therefore, when I come on these, I'm not allowed to use my company's charts. So these are unfamiliar with me, so do bear with us. bear with me, I'll get that sorted out today. So next time I'm on, I have I've got rid of the delay. So apologies on that side of things. Now, with regards to, so with oil, again, just in terms of simple lines, what I'm looking for, whether it's delayed or not, it's immaterial. We'll just go through the theory of it. So again, this is the sort of thing I'd look at, just a number of touches. And again, we've got the secondary, if I just chart this up. Again, same principle, my stop would be down here. And then perhaps looking, so obviously we'd have the break of the line, break of the low, stop loss above the most recent high. Arguably, it could even go up here and still give a pretty decent risk reward. So again, just this is all I'm looking for. I'm not looking for huge amounts of signals. And look, this isn't me saying a huge amount of signals is wrong. It's just I didn't find having so much information hugely benefited me. Okay. So yeah, I'd probably favor look, I second guessing what's going on between Iran and the US is a tricky game. But the fact is, they're sitting down, they're talking, there's confidence. So we could perhaps see we could perhaps see some progress on a resolution this week. Okay, so I'm just catching up on the chat. So yeah, like I say, okay. Right. Okay, so just going down through the things, I don't know if many of you look at VIX. VIX is a volatility gauge, so it's sitting quite nice and low for the start of the week. Sitting, as I say, sitting quite low based early on the week, so that shows the market's not that fearful of anything major escalating. Okay, now let's have a look at the S&P. Right, let's just have a look in the chat. So in terms of the, let's just have a look. Right, Tunkanata, look, there's a delay in the chart. I'm really sorry about that. I'm not going to go through it again. It will be sorted out for the next time. So let's just draw a line under that one, and let's just move on. Yeah. Okay. In terms of, obviously, it's a very different stream. Big shoes to step into. It's never easy coming in and picking up another stream. But look, we'll go through it. Again, there's lots of, whilst I do things differently, it's different things to learn. So again, we'll just draw a line under it and we'll move on. So who do I trade with? Now I work for a fund, so I'm not allowed to say the name of them. But with in terms of brokers, obviously we're trading with major banks and things like that. So we'll trade trade cash. So we're not trading futures or ETFs, but really, ultimately, it's the same thing. We're trading the same thing, just in a different way. So obviously, slightly bigger amounts. That's just natural for So for trading in that way. In terms, Toro of the Woods, in terms of order flow, now obviously we will be trading. When I traded at banks, obviously we were seeing a quite decent amount of order flow, because all the funds and large corporates were all trading through us, and that order flow was really interesting and useful. But also the other thing you've got to consider, it was quite toxic at times. So I would say probably 70% of our job was to make money based on just blank sheet of paper, just like you guys sit down in the morning, find some ideas to make money. But 30% of our job was to fill customer orders, make prices to clients big and small, even central banks. We had to make prices to central banks. Now, if you can see the Fed Reserve is selling the dollar, it doesn't take a genius to work out it's probably more likely to go down than up. So in that respect, it was useful. You were getting this genuine insight, genuine flow. But obviously, at times, it can be really dangerous, really toxic. So you could get like let's just pick a company like BP come on and sell. And when I worked for banks for the first 20 years, that was more currencies, and they would come on and sell currency, and you didn't even get a shot. You couldn't even take a breath before the market was against you. So in some respects, you knew at times you knew you were going to lose money on when you were making a price to a client, which is a horrible thing to think. But whilst you could lose money on initially, if you were quick enough to get out of the position and get with the position, then you could recoup that money, because it would keep going, keep following through. Okay, right. Do I read options chain? I do use options, but perhaps I won't go too deep in options. But obviously at the fund we use options for hedging. We do now. Whilst my first 20 years was a lot of currencies, now I'm far more a lot of US stocks, a lot of Asian stocks. More often than not single stocks, but we use options for hedging against our positions, because our job isn't just to get massive P&L. Our job, we have a responsibility to our clients to hedge their positions. If the market dumps and our core underlying positions are losing money, then this is where our options play. They all come in because there are insurance policies. So this is how we do it. Might be a good entry for MNQ to go long. We'll sit here. Okay, right. Let's have a look. NQ level to go long. Right. So again, just come down, just broke through that line. So let's just keep an eye. Let's just keep an eye on how that trades. As you say, we've got that little wick there that's just prodded through. If we come back, I mean, my bias here would be, I'll be honest, I'd rather be short than long. Now we've broken through these lines. Again, stop loss above here. Target could fairly come down to about here. That's just now, as I say, my bias to the NQ this week is up, but this is we're trading on a 1 minute chart. There's plenty of time for the market to go and hit your level and come back. That's how. So again, it can come down in a moment and go up on the week. Okay, keep talking about the big players trade. Yeah, well, definitely. Look, I'm here for another hour and a half. We're going to get through that side of things. So look, what you miss on the technical side, sorry, on the real intricate technical side that Celine and Nick are great at. I might not be quite as intricate in the technical analysis as these guys, but I can offer some different thoughts and processes and experience on the market. We just have, okay, I was so it's saying it's respecting last Friday's seller price. Yep. Okay. Where's Nick and Celine? So Trader Girl, they are both off this week. Nick in Miami, but he is on the chat. He is trading away at, I think it's like 3:30 in Miami time. So there we go. Next comment, what time frame do I trade? So I would typically the lowest I go is the let's delete all the old chat. The lowest I typically go is the 15. So I'm more comfortable on the 15 and the hour. So obviously I trade on slightly different time frames due to the nature. Not all my positions are in and out in a day. In fact, a lot less of them are in and out in a day. And therefore, but if you're holding trades for that bit longer, you look at that bit more information. So again, and I advocate, like one thing I do at the start of my week is always come out, and I'll always start on the hour, because if we start in the 1 and the 5, sometimes we can miss what's out with that time frame. And I appreciate that a lot of this is pointless work, but just put, so for example, this is certainly something I'll be putting on. Okay, now if you'd have just been in here, that's the line we were looking at there, which is pushing on. Like I say, the break of that line came good. I don't know why my sell and level window disappeared. Let's put it back on. So I said I would short through the bottom of these lows, stop loss above there, target down to here. Zoom out. Yeah, that was what I went through a minute ago. So I would take that. That is how I would have looked at it, how I went through a minute ago. So let's just keep an eye on how that ticks along. But what I was saying was, if you start on the hour, it's not a bad thing to do at the start of the week. Just have a, that's why I took it off, because it was making everything. But look, this line's a long way off. It's like down at 31.83. Okay. Now, obviously, if I hadn't put that on, the market on, let's just take it down to a 5 minute. The market could have come, still not showing up. It doesn't show up until here. But unless you've actually put it on, so I'm a big advocate of having a look on the hourly chart and just plotting these levels on and leave them, because they'll probably not affect you. But it could be on like Tuesday and suddenly the market dumps off a little bit and you're thinking, why is this line there? And then when you zoom out and see why you put it there, then you think, shit, that is a big level, because that's a level on an hourly. Okay. Right. Okay. This is a really good question. What surprised you most about retail traders after spending time live streaming and listening to YouTube? Okay, so I did 20 years in a bank, and then I got approached by a guy who was like looking to start a fund, and he talked me into going around with him. I went there, and I got there, and all this regulation, I was waiting for him to get sorted out his regulation, and by the time I got there, he hadn't sorted it. So I got there and I literally couldn't trade. So as you can imagine, I was pretty fuming. But he was quite a well-off guy, and he also owned a trading academy. So it was called the London Academy of Trading. So he said, look, while we're sorting this out, can you just get in and around the trading floor? So basically, their courses were like 3 months long. They did it well. It wasn't like Millionaire Dream, no like Ferraris or Rolexes on their website or anything like that. It's proper education. In fact, it actually fed into modules on MBAs and master's courses, both in the UK and in the US. So I kind of helped out there a little bit. And then after a while, we still didn't sort it out. I got more involved with the thing. And after a year, I ended up as CEO of the business. So we generally had around about 100 students on. Like I say, the courses ranged. The shortest course we'd sell was a week. The longest was 3 months. Now, I really enjoyed it. It was really good. Now, this was retail trading. So this is, whilst I've done fund, I've done banks, this was my exposure to retail trading. So retail trading is not a new concept to me. I spent like 5 years immersed in it when I was there. Now, that kind of opened my eyes to the differences between. I've always worked surrounded. Granted, now I'm not. I am working for the fun today. I do these 2 hours, then I'll jump on the rest of my day. As I say, I did an hour and a half before I came on this session. But that 5 years was really interesting to see how retail traders trade, the challenges to them. I mean, this is going back like 10 years ago now. And at that time, the brokerage was so bad. I couldn't believe how badly brokers treated people. But from what I can see, things have improved significantly since then. So again, I think that things have improved. Now, for me, the biggest challenge between a retail trader and an institutional trader is the fact that I have colleagues and I have a boss. Okay. Now, why that I think those are the most significant thing is, again, I'm not alone in my trading. Again, I'm even though I'm taking my own trades, my own ideas, I'm speaking about what's going on in the markets continuously throughout the day to people, to my peers, whether I'm at home, I'm doing it online with them, catching up on voice calls. When I go into the office 2 days a week, that's a real kind of deep dive. We all sit down and talk through the markets. The other thing is the accountability. I'm obviously, I have a boss, I have rules I have to follow. If I break those rules, I'm fired. And that comes to risk and everything. So I think risk is probably the most challenging aspect for retail traders. It's so easy. Tilt can't exist in my world because if it does, I get fired. I have a terrible day, join together a number of terrible days, I get fired. So again, I'm forced to behave. And obviously, sometimes when you're doing it in your own boss, I think this is why I think Tradeify is excellent. You've got this point of contact. You've got this ability to hear what other people are saying, not just us, other people on the chat. You can go through what's going on there, and again, just keep an eye. You're hearing what other people are saying. If you're having a crap day, you can hear from the chat other people are having a tough day. If the market's chopping about, you're seeing the guys on the stream, they're getting chopped up as well because it's a choppy day. And again, you're seeing it from other people. Coach, did you guys ever have inside information? I'm sure you'll understand there's an obvious way I can answer that, and that is no. Now, obviously, inside depends what you define as insider information. Now, if we, like I said before, if we see big client come on and sell, and we know that every time that client comes on and sells, then to me that's not inside information. It could be decreed in that way, but really that's just order flow. So really, in terms of insider information, again, you've got to bear in mind, not only if we got caught out doing that, not only would we lose our job, but we'd never get another job. So again, in terms of that, you have to be careful. This is your career. You're protecting it. Just started trading futures a month ago, and both my physical and mental health have been severely affected. Look, M Platinum, just relax into it. You've got myself and Coach Ryan do some coaching sessions where we cover over dealing with the psychology and things like that. So look out for these coaching sessions. They're advertised on the streams. Come in and we do cover over topics like this. Obviously, I've been doing it for 30 years. Ryan's far newer to it, but he's trading exceptionally well. And we go over these sorts of things. But look, just take a step back. If it's concerning you that much, lower your positioning side. Lower your position side. Okay, I'll just see something pop up. 150k Lightning funded if you guys hit 555 likes. So get to it. Cool. Let me just catch up. Just started trading futures a month ago. Oh, sorry, we've done that. Tradeify is a community, many opportunity advantage. Absolutely. I think this is a great space because when going back that like 6 years ago when I left there, we kind of created like a little micro community for our kind of alumni, just to kind of create the exact thing you've got on here. Obviously, to having people actively talking through the markets and going through it on a daily basis just gives you, like I say, that community. What institution, as an institution, what restrictions did you have compared to the retail trader? Restrictions, like we just had, in terms of daily trading, we just had a stop loss limit. So we had a monthly stop loss, an annual stop loss limit, a monthly, a weekly, and a daily. In terms of market behavior, obviously we were held to the highest account. Toro of the Woods, tilt is firing yourself. There is no place for tilt. There is no place for tilt. Again, because it's tricky, especially when people are doing challenges like you guys are with Tradeify. Don't ever go on tilt. Don't, if it gets near the bottom, don't just chuck another trade on and hope it goes all right and think, oh, I'll just buy another one. Trade your way out of it. That's what I've always had to do. My best ever month trading, I've only ever got close to being stopped out for the month once, and that was after 2 weeks of the month, and that's the worst position I've ever been in. But that month, I actually got it back to, I was like $1,000 off break even, which was a fraction of a percent of my monthly stop loss limit. I would call that one of my best months ever. Now, obviously, I've had months where I've made a fortune, but to have got that close to being stopped out for the month after 2 weeks to getting back to zero, it showed resilience. Always show resilience. Always respect your trading and your account, because tilt, like you rightly pointed out, tilt has no place in trading, because all it's ever going to do is harm you. And now, even now, I still, just because I don't act on the urges, I still have them. So again, when I have them, I walk out of this office, take my dogs for a walk for 20 minutes, half an hour, and then come back to the market and allow, right, let's just have a look. Let's just get back on the 1 minute, because if we can just see, yes, I am moving my stop loss. Okay. So the first move of my stop loss. Now, obviously I used these lines, these ones here, to get in. So my stop loss will now go above here. Not quite at break even, but people are often quick to move things to break even just because it means they don't lose any cash. Now, again, stop loss movement should always be for a good reason. So if I use these lines to get in, I should be using them. Sorry, let's just move that down a little bit further. So again, I wanted it to break through these lines. That's why my entry was there. So I want it just above it. Okay, let's just catch up. There's nothing. Right, okay. Okay. Right, we'll have a look at the Grand Cup in a minute, actually. I meant to do that right at the top of this. How can we work for a bank institution? Look, I'm not going to lie and say it's an easy path. What you can do is trade well, keep records of your trading. Just being completely frank with you, it's so hard to get a job in these places now without a very good degree. It's just an HR, you must have a really good degree. In terms of banking, it will be incredibly difficult to get in without a really good degree. In terms of funds, if you can get a very good track record going, then you can progress in that way. But do bear in mind that they will want to see, like if somebody came to me, and I have done this before, looked at people's results, I want to see a minimum of a year, because what I want to see is, okay, it's all well and good like the headline number being good, but what I'll then look into, and I'll look into it on a weekly and a monthly basis, is How did you react when you were bad? How vulnerable was I when I was bad? Okay, Coach Down. Have you trading bonds? Look, again, bond market, what a time to be trading bonds. Bonds are actually probably one of the drivers of the markets at the moment. But look, market's a market. Technical analysis is technical analysis. You just have to trade the markets in front of you. You never know. Bonds could turn out to be your things. Right, where is my stop loss? So you can see my stop loss here. Right, I can see someone chasing giveaways. Nick's dealing with it. Perfect. Don't think I can trade MNQ. I get too emotional and fundamental analysis and macro analysis screams at me. But this is what I was saying. Like I'm sitting here happily short of the NQ, but I think it goes up this week. But that doesn't matter because this is where I am. This is where we are. So again, we'll keep popping back and have a look at this. But let's have a look at the Grand Cup because, like I say, I meant to do this right at the start, but because of the few issues. Cool. Oh, right. Okay. The thing hasn't been updated yet. So once it has, but just so you know, just the broad strokes, there are 128 traders remaining. Of that, we have 4 of the. Sorry, that's 4 groups. Let's have a look in here. We have 4 outlaws remaining. So the London chats, Nick sits in there. Let's have a look. In the chat, is anyone still in the Grand Cup on there? Can anyone give us an update? Is anyone in there? Anyone surviving? Anyone who went out late in the week? How? Cool. All right. Tell us how you trade. What makes you go long, short? Cool. We'll cover over that. As I said before, it's just trend line breaks, support, resistance. I keep it really simple. In terms of a good competitive degree to get into the space, to be honest with you, any major degree, because it's a box ticking exercise. Obviously, if you can, it can be relevant to finance or maths or even physics. Physics is a good one, or business studies, anything along those lines. They're all really. Again, the degree is just it just ticks that box for HR. Now, experience trading the markets is what gives you depth of understanding. Now, okay, so we're looking at this now. I've got to think, where am I going to be trailing it next? So again, we're moving along nicely. So I can definitely now. Basically, what I'm looking for in my trails is always, okay, we've got a bit of choppiness here. Tried to go back up, failed, tried to go back up, failed. So now can I trail this? So this will be trailed down to here. So again, I don't know how to move that. I can't move that without moving that. Sorry. But yeah, I'm just trailing this all the way down towards my target down here. So we'll check in with that in a minute. How do I identify when best to sit back in the markets? Now, obviously, I spend a lot more time not trading than look. One of the hardest things about trading is physically not trading. Now, obviously, the reason I'm using, although I don't typically use a one, someone's asking, am I in that trade? No, this trade is an example. It's a perfect example of a trade I would take, but I didn't physically tick the button because I'm not allowed to trade live on externally. Thank you. Yeah, Russell Dean Harris clearly knows his stuff, and very good point. Yeah, sorry guys, obviously chart's delayed. If I'm back on this week, I will definitely, I'll definitely have that sorted out. So I'm really sorry about that. That is my fault. Okay. Right, trade gold. Okay, let's have a look at gold. Oh, that's crap. Oh, I'll just do it the old-fashioned way. Now, when because I'm not trading futures, I tend to I trade on the cash market. So in a 1 minute, so let's just take gold out onto 1 hour. Gold's kind of sitting in a bit of an unusual. Gold's sitting in a really unusual spot because it's sort of typically gold is this safe haven asset. So if you've got war or anything, gold would typically go up. But after 2 years of real solid appreciation, gold really has kind of taken a sideways step. So at the moment, gold is trading almost in the opposite manner to what it typically would. So like I say, gold would be your kind of risk going on, buy gold, buy gold, buy gold. But what we've noticed over the Middle East situation is the dollar has kind of taken that mantle. And when things escalate, people buy the dollar as the kind of ultimate safe haven. And for that reason, gold against the dollar, because bear that in mind, even I know I'm looking at gold against dollar here. Gold is always against the dollar, unless you specifically select it not to be. So therefore that's trade a little bit heavier. So if we have a look on a 1 hour, again, this isn't great, but it's just the sort of thing I'll put on the chart. Obviously, we've got multiple touches down that. Now, if I bring it into a 15-minute, that'll probably look a bit tidier. So, yeah, again, yeah, I can't argue. In terms of the question, what makes me take and not take a trade? It's the lines. Simple as that. Again, oh, actually, I like this. Hold on. So look at this. It's a bit messy in here. That's kind of killed it a little bit. So I did think that this was going to be good. And this is the thing. You've got to be honest with yourself. Like for a second there, I thought, you know what, that could be a good line. But the reality is it's not. So just get it off the chart. And again, be prepared to. I used to work with some guys that were like, never trade on a Monday. Don't trade on a Monday. Now, the reason trading on a Monday can go so badly is because everyone comes in and everyone desperately looks for opportunities, looks for trades, because it's starting new week, got to make some money. In my opinion, that's why Mondays are poor, because people force trades on a Monday. They're less selective. They just want to get that trade on. That's the thing to keep an eye out for. Again, just stick to your plan. Have a way that you trade, have rules, have a set criteria of what you want to see before you take a trade, and don't bend on it. And if that means you sit here for days and days, well, a couple of days without, well, not a couple of days, 4 or 5 hours without trading, so be it. Cool. Orchard's path success. Yeah, obviously we'll keep going through them as they come. Let's just have I ever HMA 9. I have to say it's not one I have ever done. PhD back below 4519. So back through this level here. Now, Tomio, what degree did you study to get this job? I don't have a degree. I left college really young. I did it the kind of old-fashioned way. Unfortunately, our Mexican dance is a familiar face. Good morning. I hope you're well. So I don't have a degree. I have a very average education. But look, the world was slightly different back then. So my route into trading was I just did like when I say college, that means something for those of you in the US. That means something different. So I left my education at about 17. 17, and I got a job just working in. I wanted to be a trader, so what I did was I got a job doing admin in the back office for a bank trading room. Now, that put me in and around the traders. Now, when you're in a bank, you have to have special permission to go into the trading room. So when I first started, all I was doing was processing. This is the most boring job in the world. But what I did was just started chatting to the traders, just basically just having kind of banter with them, telling me my ties look stupid, all of these stupid things. But I got chatting to them, and then once I got chatting to them at events organized by the bank and things like that, I was so desperate to get in the room, but the bank had a rule that nobody got in the room till they were like 21, 22. That was the youngest they would take into the kind of trading room. Now, I was too young, and I didn't want to wait like 4 or 5 years to get into the trading room. So I said to them, my job in the back office was like just processing. So I started at 9 a.m, but they started at 7. So I said to them, look, can I come in at 7 and just sit on your desk and just get an idea of what you do for the 2 hours before I start my day job? And they let me do it, which was really good. I thought, brilliant, I'm going to go in, I'm going to learn loads. Basically, I went in and I did the breakfasts. I went out and got breakfast from various different places, and that was basically the entirety of what I did in that time, which wasn't ideal, but ultimately then they got familiar with me. I didn't mess up the breakfast order, obviously. So when one of the more senior guys left, obviously everyone got moved up, and I came in at the bottom. So that was my route into trading. And bear in mind, this was in the 90s. So I took a lot of heavy abuse. God, these days I could be earning millions of pounds for some of the things that were said to me in that first few weeks. Cool. Yeah. So Russell, I do trade spot. I trade, like I say, I trade spot and cash markets. That's why I've gone on, because the ticker I've got here is not up to date. Tuna. Tunkanata. Don't worry, mate. I'll be honest with you. There's many things I'm not comfortable with. Being on a stream, that's been the biggest challenge for me. Talking about the markets, talking about the strategy, I could do that all day long. So I'm very easy. So when I was talking just a minute ago, I was talking about taking abuse. No abuse that I could ever receive will be worse than the abuse that I received on a trading desk when you first start. I can categorically tell you, trading desks in the 90s were brutal things. I remember going home to my mum at the end of the first week, because I was still a kid. I was like 17, 18. And she was like, how do you think it's going? It's like, they hate me. On Monday, they'll probably send me back to my old job. But what I didn't realize was that's just what they did to everyone. It was kind of make you or break you. And again, I wouldn't say I broke through it, but I made it through it. So that is how, that's how in terms of abuse, I played a high level of sport as well. So abuse, water off a duck's back for me. So look, don't sweat that at all. Cool. Right. Let's just go back to this NQ. So we do have a green candle. I'm on a 15-minute chart. Let's get back onto the 1 minute where we found it. So yeah, just turning a little bit, but look, it's a break-even cut now. Let's just let that ride out. Good old days for people aren't soft. I can see that to a degree, definitely. But again, yeah, I wouldn't want my son or daughter to go through what I did. But yeah, look, you do need to you do need to toughen people up to an extent, to a fair extent. Let's just say that. Right, in terms of stocks. Now, in terms of stocks, look, you just can't argue with the AI trade at the moment. There are more people happy to buy it than there are more people happy to sell it, and therefore that is why we're pushing on to all-time highs in stocks. In terms of crypto, I am not the person to be answering questions on crypto. I was a skeptic for a long time. What I've done now is open my eyes to it. I'm opening my eyes to it, but I don't trade it at this moment. I'm watching it. I'm keeping an eye on it, and because I need to look and then like absorb the price action, because like I say, for a decade I'll be honest, I completely looked down my nose at it. I didn't think it was viable. Now obviously the reason I thought that was because I trade with like professional money, and therefore we couldn't invest in it because we weren't allowed, because it's not regulated. Now obviously some of the big banks are creating these kind of ETFs and things to trade it. Then now so that's why I'm paying attention, because it's moving towards being traded. It's moving towards being able to be traded in that way. Right, let's just catch up. Obviously a lot of W's. Thank you guys. All stocks the sell market could drop 20% lower just to start. I mean, margin debt coming off and get us there in a week. Yeah, Russell Dean Harris, you absolutely know your stuff. There's a few comments from you I can see. Now, obviously at this moment and at this time, we're riding the wave, but we're always just keeping. Now this week, from if AI stocks are driving the market, then what we need to be looking out for, and again, this is something I do at the start of the week. Why is this not updating? There we go. Now, obviously, I'd implore you guys to do this. Now, we know that AI is driving the markets, so therefore we need to look and see which AI stocks are giving earnings this week. We're just sort of coming to the earnings season, and it's been a really good earnings season. I think it's something like 85% of S&P companies beat their EPS expectation. So, but again, like I say, if AI stocks are driving the markets, then let's see. Palo Alto Networks, again, that will impact AI. Broadcom, CrowdStrike. Now for me, obviously we've got a couple of other big names, Dollar General, and just to give you an idea, guys, for those of you who aren't familiar with this, and of course, sorry, Hewlett Packard, of course, I think I must have scrolled it up. These will be, so Hewlett Packard, Palo Alto, Broadcom, CrowdStrike, four companies that will influence and move the AI trade. So again, we've got to keep an eye on that. So Hewlett Packard comes after the close tonight. Now, if you're new and not familiar with this, again, I filter. So I just filter high importance, because if you do low importance, you're just going to get a load of too many. But what we need to look at is look at the market cap. Look, these are going to tell us. So the four I singled out there: Broadcom, 2.12 trillion. Now, if there are, therefore, when we've got a company of that size, when the earnings come out, are they likely to move and influence the market? Absolutely. Now, all of these big ones, apart from Dollar General, which again, not tech or AI, but that will come out in the US morning. The rest will come bang on the close. So we just keep an eye on those. Cool. Right. So we're trying to get likes for a giveaway. What is even dumping the Nasdaq anyway? Now, obviously, the futures sort of we opened up. I know a lot of people like to, well, there's not necessarily any gap in there. But yeah, we just sort of come on. Now, obviously, this is the hard part. And again, this is another thing that I think is really hard to deal with as a trader. When you've got that momentum, obviously I've trailed it down to flat. We've got the momentum there, but then the market sits. Now, everything tells you to just, oh no, it's going back up. Do I get out of this? Do I just take what I've got? Look, when I got into the trade, the plan was good. The target wasn't super greedy or anything like that. The stop loss was in the right place. I've trailed I believe my trailed stop loss is in the right place. Obviously, if we can get another leg lower, then back through this low here. Now we've had a failed, broken through, come back, tried again. I may look to trail. So my next aim is for them to see a market drop a little bit lower and trail my stop loss down to about here. But for now, I'm not touching it. Again, not trading and not over tinkering with a trade, I think, are two of the hardest things to deal with as a trader. Bank trades CFDs or not? I mean, some do, but we do. Look. Bear in mind, when you're in a bank, you're trading the bank's balance sheet. You're just trading pure cash. So if we're buying shares in indexes or gold, oil, we literally physically trade it. And if we hold it for a period of time, we swap it out, we push it forward, but we're trading the physical. Right. CO2 report. No, I don't watch that. Thanks. Cool. Right. Let's just have a bit of a look around, see if anything else has been moving. So let's just see what's oil. So oil did break down through and reversed. As I said, that's the bane. But my entry on oil would have been that little bit lower. I just wanted that extra confirmation that we were getting through there. So again, that trend line could easily have faked me into it, but I want a trend line break. And if I can, it's not essential, but if I can, just have another area of importance around it. So therefore that saved me getting put in on that trend line break. But the one thing I will say now is that trend line it's killed that trend line, hasn't it? So I do, and again, it can be easy to leave these lines on and think, oh, I was going to go through there. But the reason I wanted to trade through that level here was because we've broken that line and we had the momentum of that line break taking us through the extra lows. But if we've broken through that line and come back up, it's gone. So be very decisive in what you're doing. If your plan was, if you had a plan for a reason and part of that reason is now gone, kill the trade and walk away, move on to the next one, and just look out for it. So you're in a short of NAS and gold. I can't disagree with either of those on the day. I might just trade on NASDAQ, too much price. Yeah. The public market mess up the algos and pump. Right, okay, what public markets do mess up the algos and pump? Yeah, I guess there is a case for that. So how much was the biggest W trade that you've seen in real life and losing? I genuinely can't say. But look, I've seen 7 figures made in a day on my desk. Again, I'll be broad. Biggest down day in a day. Like as I say, well, it gives you an idea. I've seen 7 figures made in a desk, and the worst down day I've seen on my desk was 20% of that. So the worst down day I've ever seen is 50 grand. And that was pretty bad. But to be honest with you, that was obviously, I'm holding trades for that a little bit longer. And this is going back a long time. This is back when Russia shot down a Ukraine commercial airline. I was holding a yen position over that weekend, and that was very bad. At the currencies gap a lot less than indices, obviously, because the currency market only shuts once a week. But I was holding a position when that happened. I was long of euro yen, and obviously yen in those days was a real risk currency. Anything goes wrong in the world, people buy yen. And I had a stop loss that was only going to cost me like 4 grand or something like that, because the position was going really well. I'd already trailed my stop loss on it. I was happy to hold it over the weekend because I was risking 4. Slippage cost me a further £46,000. And the worst thing about it was I knew about it all weekend, because obviously I think it happened on the Saturday. I was out shopping with my wife. I got a Bloomberg news story push. It's like, oh God, it's going to be bad. But I didn't think it would be as bad as it was. So that was my worst trading day. Right, okay. Right, okay, so let's just catch up on here. So yeah, sorry, I can see that Roman's done it. Do you have any self-imposed rule and trade in the first trading day of the month? Yeah, literally, that's a really good point. Baby steps into the month. As I said to you before, I have a monthly stop loss, weekly, daily. What I'm really tentative as I come into a new month, because what you can't do is just walk in. Now, in my head, every single month, I don't care if last month was the best month I've ever had in my life. At the start of every month, that's forgotten. I don't care if I'm having the best, last month was the best month, I'm having the best year of my life. That doesn't matter. When we start a new month, we start afresh, we start from scratch. And like I say, baby steps into the new month. I do not want to book. And in terms of that, it doesn't mean to say I necessarily trade a smaller amount. I'm just far, far, far more selective. Far. I really have to go, right, is this right? Is my primary line that it's going to break correct? If it is, then is my secondary. So for example, in the example of this one here, this was my primary line, this was my secondary. Are they both good? Are they both justified? And I really force myself into it. So I don't have like a written or programmed strategy or anything like that. I just have a set of rules in my head, and they have to be measured. My risk reward, as I said to you before, my minimum is 3-to-1 risk reward. Again, that has to be adhered to. I'm more strict at the start of the month. Now, obviously, going halfway through and towards the end of the month, if I'm having a good time, I can be a little bit more, not bend a rule, but I can be a little bit more, I can afford to have a bit more of a go. But at the start of the month, I'm so strict on it. Because of max day trade, yeah, I mean, that typically is, look, let's not dismiss, that's how it typically trades. When the futures coming up in this session here, that typically has a bad morning, then we quite often see that come up. The finish in one side of inverse head and shoulders, perhaps, yeah. I'm not a big not a big follower of heads and shoulders, but sometimes I can see them clearly, and look, I do think they work, but I've just found that everyone has their way, finding their way. Educo Vera, thank you very much. Do appreciate that. I mean, everyone has pluses and minuses, but so hopefully this is a good opportunity just to hear things from a different perspective. And obviously Nick and Celine will be back later in the week. Right. Cool. Right. Let's just have a look around. Okay. So look, let's just run through what I do. So I said to you guys, I've been out here since 6:30 this morning. So obviously I'm using the Bloomberg platform, the actual platform itself, for most of my things, but I just pulled these pages up because a lot of the information. So what I'll do, look, I know the fundamentals take years to learn. They really do. Honestly, it took me, I would say, 5 years until I could say I was comfortable with them. And a lot longer before I could say I was good at using them into my trading. But the journey's got to start somewhere. Now, obviously, all the guys I know, Nick does it, Celine, Spudnik, all these guys will come on and talk about a bit about what's going on. But pay attention to it. You're not going to learn how to fundamentally trade overnight, but just start allowing yourself to be a little bit aware. We all know there'll be times in our day where we're literally doing nothing. Start filling it with reading a little bit about what's going on. We have the beauty of AI now. Again, if you read something and think, oh, that makes no sense, chuck it into AI. Ask AI to simplify it for you. Again, that's my job when I come on these streams. But again, it's something you can be doing for yourself. When I first started in the bank, in terms of learning, I got no help. I really didn't. they chuck you on the desk, and they're like, my job. I started on the dollar mark desk, so that's US dollar against the German mark. So that's how old I am. I traded pre-euro, but I was just told I had to have £500,000 in it at all times. Now, in banking terms, £500,000 is nothing. It's like a balance. You on the trading platforms you primarily just trade a minimum of $1 million. So you're anything under $1 million, you just sat, and you either chose to be long or short of it. It wasn't a position per se; it was just your balance. But obviously, you want to get it in the right direction. So I was told just sit there, and it was a really, really good way of doing it, because what it did was force me to be in the market. In the first few days, I was basically panicking the whole time because I was watching my P&L go up and down. Obviously, I could have positions in up to 2 million. This was what they gave me as a trainee. The other guys on the desk, they'd have positions in up to like between 10 and 30 million. Again, that's not me being blasé or showy-offy. That just in bank trading, that's probably on the lower end of what a position size you would have as a currency trader, as I was in those days. But I remember saying to my boss at the time, like, because I've got to hear that other traders on the desk have targets. I was like, and I think I started in June, and I said to him, "What's my target by the end of the year?" And this was a couple of weeks after I'd been on the job, and he was like, "If you get to the end of the year on 0, I'll be really pleased with you." And I was like, well, he obviously doesn't think I'm very good, because to me that sounded sarcastic, and like, if you get to the end of the year on 0, I'll be surprised. But that actually wasn't what he was saying. And much as I took it really badly, what he said was absolutely right. Because, and you've all been through this, sometimes at the start, when you start trading, the hardest thing to do is not lose money. And that's kind of what, if I could get to the end of the year and not have lost money, then it showed that I obviously had the beginning skills. Right, giveaways. I'll wait for instruction on giveaways. I'm never done a giveaway before. Right, coach, don't think a lot of fundamentals have changed in recent months, years in terms of how gold moves against stocks as a safe haven. Yeah, I did actually. I just spoke about that actually. I don't know if you joined just before I say it. I've spent my career just buying gold when bad shit happens in the world, and that's not where we are in this moment. The dollar is taking over in the core. Nick is doing the giveaway. Thank you so much, Nick. I do appreciate it. So yeah, guys, similar thing to what I was talking about me at a bank. You getting your first payout. It's just about going through the process and first of all, you've got to get used to not losing, and that's your basis to then build upon it. With Taco's strategy, there is no way not to lose money. Look, that's exactly right. That's exactly right. Trump's a nightmare, and I'm not political. I don't know. I'm in the UK. I've got no axe to grind in US politics, but he is a nightmare, and we will lose money on trade. I actually have a file. I keep a trade sheet for every trade I do. I have a file, and they're Trump trades, because basically, if I've taken a trade and I've lost money on it because Trump's come out with some random shit, I have to say there's not a lot I can do about that. There is not. I could analyze that trade to death, but if Trump's just jumped out with some random shit on Truth Social or whatever it is, or Twitter, then I can't extract. I can't, because the reason I keep trade sheets for all my trades is because I'm looking for patterns. I'm looking for positive patterns, but I'm also really looking for negative patterns. I'm looking to try and see when things have gone wrong. Is there any like, am I getting put in and then whipped out? I trade trendline breaks. That's obviously going to hurt me more than anything else. So So again, but I can't hyperanalyze Trump trades. But this is just it. There is going to be time when when there's nothing we can do about it. Again, it makes it tricky. And look, we're in for another week of that this week, without a doubt. There's no doubt at all. Probably this afternoon we're going to see some whippiness. And that's why we've got to keep it tight for the long term. For the long term tradings, for my trades over 2, 3, 4 days, I have slightly bigger stop losses to accommodate these pullbacks. Don't get me wrong, at times they're still going to get pinged, but in my short term trading, just being that nimble, and that's why I have a risk reward of 3-1, because it allows me to endure these Trump trades. Because when I do get it right, and when the Trump trade actually goes my way, let's not dismiss that can happen. Then again, it allows me to. Right, I like Trump as the president. However, I bloody hate the way he conducts himself. That's exactly right. Like I say, I'm not saying anything political, but if we know, like, payrolls is out on Friday, it's going to be a big mover. The market's going to fly around. Again, that. We know it's coming. We know the time. Therefore, as a trader, we can be in and out based on the. We can choose to be out of the market if we don't like the noise of payrolls. However, for example, if Trump said, "I will be issuing a statement at 11 a.m.," then that puts it back onto us, and we can go right. If from what we say, we know the market can fly either way, we can choose to be in or out of it at that point. Personally, I would be out of it, because if I'm in it, it's red or black, it's good or bad, and therefore that, to me, that's not trading. That's just being. I might as well go to a casino, because I'm just sitting, knowing a minute Trump's about to speak, crossing my fingers. But yeah, I do think we would benefit hugely from Trump telling us when he's about to speak. That's just good market order. Obviously there's a theory of him getting himself set on trades first. Again, I'm pretty sure that would be looked at quite heavily, and needs to be looked at quite heavily if it is actually genuinely happening. But again, I'm sure that will come to light at some point. But yeah, the Tunkanata, yeah, the just good order, I will be issuing a statement. I think that for me would be the best market practice. Okay, where can find at Coach Dunk? I do need to generate some socials. In fact, I'll get on and do that, because I'm not a very social person. But I'll do that, and then what I'll do is just put any interesting articles, decent lines and things like that. I'll share a bit of when news is coming out. So next time I'm on, or when I do create socials, I'll get the Tradeify guys to give them out, so that anyone wants to follow is maybe able to. Right, Trump wise, yeah, again, definite. No, I said definite, I shouldn't say that. But you look at the volume of trades. Now, when I was working for, now I work at a fund. Well, I think it was something like 60 trades a day that was being done on his account. I work for a fund and I do less than 60 trades a day, significantly less than 60 trades a day. When I was at a bank, I was probably doing between 100 and 200 a day, so around about 150, and there was customer order flow in there as well, so I was filling orders for that many trades. So anyone who's trading 60, let's be honest, he's not sitting scalping the NQ, is he? Cool, right, we are moving again. So again, I'll just trail this stop loss down exactly where I said I was going to. So again, I'll just trail that down to here. Sorry if I knew how to do it. So for those of you who just joined, I sold when we broke through this level here. I've been trailing the stop loss down, because very soon we're going to get to a point where I like to maintain my risk reward in a trade. So very soon we're going to get to the point where if we get down to here, where I've kind of got a 1-to-1 risk reward. So at that point, I might start trailing it a little bit more aggressively. At this moment in time, I'm not sure where that would be to. Perhaps just we've got low, 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 that's not ideal. That doesn't really excite me. But let's just wait and see. Again, we could get a trend line that comes down here, and I could perhaps trail it in a little bit more aggressively. But let's just see how that one rides out. Right, I've been trading just over 12 years, and I have to say, with the exception of the COVID market, the first China trade war was tough. That was really tough. Darth Vader's really tough time to trade. This market, it's one of these things. I agree with you. I definitely agree with you. But really, I don't think there's been a year in my life where I've not thought it's been the hardest year. But I honestly think in this really has been tough. I mean, the Middle East, we're dealing with AI surges coming into the year. Everyone was concerned that the AI trade was perhaps overdone and coming off, and it just shows there's obviously still demand. We saw like the likes of Nvidia, some of the biggest drivers. I mean, it's kind of gone to sleep a little bit after its earnings last week. Jensen Huang was out. I think he was in Taiwan at the weekend. And he was going through the new chip, Vera chip, that's going to be the new CPU, and looking to battle in that market. I think it is. Let's just click on it. Yeah, it's up a little bit. It was around, when I looked first thing this morning, around about 2% on the back of that. But really, Nvidia's doing this well without proper access to China. If it gets here at some point, which I think it will, it can really push on, and we can really get into that. But John White, absolutely, a good trader learns to adapt to many market conditions. It's evolving, and this is absolutely right. The volatility of the market dictates how you trade it, and obviously you need to see a little bit. So how I traded at the start of this year is not necessarily how I'm trading now. I'm just tweaking it. And someone asked about backtesting. I don't electronically backtest. Like I say, because I'm a dinosaur, I keep a trade sheet. I take a screenshot of the chart when I get in. I take a screenshot of the chart I get out. I write just a couple of lines about why I'm in and out. Now, as I say, I'm a dinosaur. Every weekend, not every weekend, every 2 weeks, I sit down with my trades. I print them out. Terrible for the environment, I know, but look, I do it. It's just something I'm doing. I appreciate I can do this much better electronically, but I have my way and I like my way. Now, what I'm doing is, like I say, I strip out the Trump trades because I can't learn anything from them. Impossible to learn from them. Now, what I'm looking for is, I've got a pile of winners, pile of losers. I'm looking at where am I winning, because I'm trading quite a few different things. I trade currencies, gold, single stocks, indices. I'm looking to see where I'm getting the best success. Now, obviously, I want to see what not just which are giving me, because obviously there's going to be a winner. There's going to be the highest percentage return, and obviously that tells me the way I'm trading is working well in those. So I will seek out those opportunities more in the next trading session. I'll start looking at that. And obviously there's a loser as well. I could click on something I could look through my notes and see that I've not made money once when I've traded, let's just say, gold in the last 2 weeks. Now, does that stop me trading gold? The answer is no, it doesn't stop me trading gold. But the one thing it does, now I know that I've been very poor at this, the one thing it does is it allows me to think, right, you've got to be right, because history's told you've not been that good on it. Yes, I'm sold on AI now. But yeah, I will find a way to do it, because I'm really enjoying the benefits of AI in a lot of what I do, and I do need to instigate it in there. So I need to get it to think like me, and we'll go through it in that way. But yeah, sorry, going back to the trade plan, what I'm looking for is, so from the winning trades, I'm looking at the holding periods, because again, I want to know where am I, and it's not just where am I most effective, it's where is the market allowing me to be, because the market I'm only as good as the market that's in front. I can structure my ideas around the market, but what I want to extract from my information is what am I doing that is working in this market. Now, in terms of, it's not all about the winners. In fact, the winners is actually probably 20-25% of my time. What I want to be doing is looking at the losing trades. I want to be looking at what isn't working, what is happening, and if I can see that I'm constantly getting ticked in and ticked out, ticked in on, I trade trendline breaks. As I say, the bane of my life is them going through my level and then retracing. Now, if I can see that's happening time again, say when I'm trading gold, if I can see that I've got like 8 trades in gold where I've been ticked in and it's reversed, that's a good thing. It's shit that it's happened, but it's a good thing that I can see that it's happened time and time again. Because what I then do is those 8 trades, I think, right, what could I change? What could I have changed on all of these 8 trades that would have saved me money on 60-70% of it? And if I can see, like so for example, when I'm trading gold, if a trend line breaks, I always give it an extra 5 points. That's what I'm doing at the moment. I'll always just give an extra 5 pips. But if I can see it's gone like 5 points through, I've been put in reversed, 5 points through, 6 points through in reverse, 7 points through. If I could see that if my 5-point rule was changed to 8 points, I would have eradicated a number of those trades. Why would I not do that? I would definitely do that. I should definitely do that. Because look, losing trades are really important. We've already lost money on them. Grab some good out of them. So this is why when I said it a moment ago, the way I trade is always evolving in a fractional way. Just these little tweaks, and the little tweaks come from the losers. So again, it's just something to think about. Don't just go losing trade, forget that, move on. I do my analysis every 2 weeks. So I've done it. I once did it for 6 months, and I strategized about this plan and everything. I've made all these changes. But the problem is, 6 months ago's market, where are we now? 6 months ago market, we were worrying about the AI trade. We were at year end. That's a very different market to where we are today. So I tried it down to a month. Again, I'm in the markets. A month can be a really long time. Things can change a lot in a month. And that's why I don't think a week's enough. And I've personally, I'm not saying this is what everyone should do. I'm just going through how I got to this decision. But I analyze on a 2 weekly basis because it gives me enough history to analyze, and it's up to date and relevant enough to take into the new month. So I always get asked, what's your edge? Right? My edge is this work. My edge is my analysis. My edge is just looking at the market, my most recent results on where I'm losing money, to see what I could do to stop doing that. I'm not ripping up strategies and starting again, throwing a new indicator into there. I'm just squeezing, tweaking, trying to be that bit more optimal. 6 months to build a strategy. Yeah, nah. Month each year that has been consistently worse than other months to you. Kismaz, not particularly. Do you know what? Kind of August is, I wouldn't say it's always August, but August is always a tough month. So many people on holiday. Liquidity comes out of the market. I tend to go a little bit lighter in that month. It can be a tricky month. But look, just being honest, there's always 1 month a year I struggle in. It's always, it happens. And this is the reality. Trading, there's always that one tough month where it doesn't necessarily mean it's not a positive P&L month. I very rarely have a down month, but what I talk about is just being in and around zero, and it can be so frustrating. And you start to think and doubt yourself, but really just how you react in these. So Ross Berto, do I have my own show on Tradeify TV? So typically, obviously, I don't know when what's the time frame you're in. I typically, my usual would be, I'm in the UK. I'll say the times in UK. So typically I'll come on at 1:30 for the US, just before the bell. And me and Spudnik will go through. I'll do a bit of a deep dive into the week, have a look at everything that's coming out. Other sessions I do again in the New York stream on a Wednesday in New York lunchtime. Myself and Coach Ryan will come on. Again, that can be a really useful session. It's just a session builder. Come bring your coaching things. Again, things like trading psychology. Me and Ryan go through a lot of what we do, how we do, how things, how we set ourselves, how we deal with the trouble psychologically. Because it's all well and good coming on and going through and look, this trade's gone all right, but so it looks like this is a good thing and I'm a good trader. But I think it's really important you guys understand that good traders lose money. How do good traders deal with it? You don't. If you lose money, it doesn't mean to say you're a bad trader. It just means you haven't got that trade right. But what can you do about it? How can you evaluate what you're doing? How can you, like I say, we're not always starting ripping up. We're just making these tweaks, learning from what we're doing. Cool. So yeah, I was going through when I'm on. So New York lunchtime on a Wednesday, myself and Coach Ryan. But whenever we have big indicators, like, so for example, on Thursday this week, I'll be going on in the power hour late in towards the end of the New York day, typically with Rebecca and Spudnik. And I'll just jump in and just do half an hour. We've got payrolls tomorrow. So what I tend to do is just go on, try and simplify down what payrolls mean, try and simplify down how the market could react to it. So I'll come on and do those bits. And obviously, just like today, sometimes when people are off, I'll jump in and fill in a little bit. So we'll go through that. Okay, retail traders too much. I think retail traders think way too much short term, like assessing performance based on daily or weekly return instead of monthly. Yeah, Darth Vader, I agree. It can be worth, like I say, I do 2 weeks, but I think a month would be very beneficial as well when you're first starting out. But I do think 2 week too. But people try and identify things on a day. They look and try and fix on a day. You've got to take a bigger piece of analysis. Is only worthwhile if there's more data within it. Someone's asked which stadium's behind me. So although my accent sounds English, I am Scottish. That is Aberdeen. So basically my wife, this is my garden office. So my wife just chucks anything she doesn't want in the house out here. So anything that basically furniture, everything. It's just, I don't get the any choice in what comes out here. Right, let's have a look. How I fix my losing streak. I just trade 2 hours a day on NASDAQ, open bell, and then after 2 hours, I'm calling the day because no amount of prop money can crush high volume. Fair enough. Look, this is exactly what I'm talking about. I said at the start with my winning trades, see where you're getting your winners, see where you are optimal, and that is what you're doing. So yeah, what you've just said there, Kazu, just absolutely emphasizes the point I was trying to make. Okay, let's just go back to this NASDAQ. The thing we have to bear in mind now is, where can we put, I'm just looking for areas where I could trail the stop to. Okay, so I think I can certainly be trailing this stop loss again. So I've got this trend line, which is, look, I'll be honest, this trend line's okay. I may not instigate a new position through it. Let's just trail this down. So I'm going to bring this back. Yeah, so I'll trail that down to there. And just as a reminder, one thing you won't get from me is technical excellence. So this is where I entered. So I wanted a break of that line, a break of these lows. So I entered around about here and now just trailing the stop down. So it's nicely in the money. It's guaranteed me a profit. My risk reward in the trade from here, it's still got just under a 2-to-1 risk reward, but I'll keep, and I like having this trend line now, because my ideal is this market just keeps on trending lower and I can just move my stop loss behind this trend line. So for me, that's perfect. A trending market like that comes down, because I'm a big advocate for trailing stop losses, because I hate giving money back. Obviously I was running trading desks for banks with multiple traders underneath me. I could take my traders losing money. I could take the fact that happened. What I hated was when we all sit and we can all see each other's P&L for the day. I'd hate to see like one of my traders be like 30 grand up or something like that, and then I go for a meeting, come back, and he's 5 grand down. Now, for me, that was the most infuriating thing. You've got to protect your P&L. You've got to protect it. And we're in a market that can completely flip at the drop of a hat. So when you've got P&L, take it. But again, one thing you'll have seen, there has to be a good reason for my trail. I don't just trail it down. I'll look for areas, technical reasons for it, because if the market gets up to it, I want the market to have a chance of coming back down again. Look, institutional manipulate markets because they have big sizes to buy or sell. Look, I get asked this question quite a lot, and it's a perfectly understandable question. Now, obviously, the perception is that the markets, the big banks, just take stops out. I would say that isn't necessarily the reality. Go back 15 years ago, then we will see there would have been a manipulation. There would have been, if you had a huge stop loss to fill, just to give you some explanation on why this would happen. So banks would attack stop losses 15 years ago and below. And it was a bit of self-protection, because but what you've got to bear in mind is, if you're watching a massive stop loss for millions and millions of pounds, the minute it goes through that level, you have to fill your client at that level. If you slip that client, they will very unlikely not trade with you again. Okay? Now, that creates a problem, because unless you're perfect and manage to buy the exact amount at the exact moment, then you will lose money. You will lose money on that transaction. And let's be honest, nobody likes to lose money. So what you'd see is the bank, almost like self-protection, when it got close and they thought it was going to go, they'd have to start buying. If it was a stop loss for someone who's short, looking to buy, they would start buying through that level, because they had to. Otherwise, they were going to lose too much money. Things have changed hugely just in the last 10 years. Obviously, those who may be aware or not, there was a lot of like court cases about LIBOR, Forex, market manipulation, a lot of high profile banks, high profile names. And obviously that brought a lot of scrutiny on what you're doing. And these days, honestly, banks are like angels these days. They will only trade on, they will do literally what they have to do. And the sad thing is, a lot of it's been automated because a human can be perceived to be like front running or doing it. But so what a lot of the banks have done is they've automated it. They've built algos that will literally do this, because if you give an algo a set of rules, it's going to follow them. That's not good for the market. But that's where we are. So in terms of, are banks manipulating the market to take retail traders out? I will say that doesn't happen. And I can say this from the perspective of being in the bank, being in a fund, and obviously spending 5 years in and around retail traders. That can, again, some of the slippage that I see get given them can be a little bit harsh. I would say is the biggest difference between, but that more sits with your broker, your retail broker, than it sits with a bank responsibility. Cool. Right, okay. Right, we're getting towards the end of the session. So let's just have another quick look around, have a look at the ES. It's not dissimilar. Again, what I'm looking at, because of the way just in this short period of time you guys are getting an understanding of how I trade, I'm always looking out for this short term. Let's just go back a little bit just to see. Let's just scroll in here. So what am I on here? 15. I have to be careful because when I'm on here, I feel like I force trades because I want to be going through something. I think that line is me forcing a trade. Yeah, it is, if I'm honest with myself. You could, I've not got the number of touches that I'm typically comfortable with. Yeah, I'm not over the moon with that. Look, Darth Vader Trader, what you've said there in the most simple terms, that's absolutely true. Banks only care about liquidity. They want there to be loads of liquidity, and being honest, retail traders don't. They provide that much liquidity. It's so fractional. Don't get me wrong, it is growing, but it remains quite small. So doesn't. But look, we're all we all are where we are. We're all trading the same market. But the one thing, the only reason I really like to quash the rumor that banks are doing it is because it gives people an easy excuse. And that's the reason why it's mentioned so much, because people think it gives an excuse on why you've been stopped out and why you've been faked in. I get faked in. Do I think, oh, someone's having me over? I tend to think, I think more, try and think it's going to do me more good to think, okay, well, let's keep an eye on that. And if that keeps happening, then I need to change something. That's the way to think about it. Not, I've lost money, it's someone else's fault. Thinking like that will not help you grow. It will not help you achieve what you're looking to do. So yeah, okay. Right, we're nearly at the light goals. I believe Nick is on the case. So guys, keep going for the light goals. Let's just quickly go through. So we've got the Grand Cup. So as I said, Spud, the two Nicks from Tradeify are there. So no stop loss butcher. So Nick from you guys stream is in there. So let's just see who's he playing. Diego Olivier. So later in the day, this will be updated. I believe there's 3 or 4 updates in a day. So again, but we need to just keep an eye out for Nick's performance. Obviously, as an outlaw, we got D Money and PB Investing. As you can see here, Nick had a decent day, solid, nice gain, and his opponent just didn't quite get profitable. So we'll be flying the flag for Nick today. So D Money is playing against Cam. D Money similarly had just a solid day, 1,700 bucks up, and his opponent. I take my hat. I know there's only 4 outlaws left in this out of 24, I think it was, but we have to appreciate how tough it is to make money every single day, and that is what's being expected of them. Alternatively, you can get through by being the least bad. I've not actually seen that happen too often. I think I did see it happen in one head-to-head last week. But look, these guys are. This is tough. There's a good few days left for these guys. So let's just see where they get through. So Spudnik, who's he up against? He had a tough one on. Was it? Oh no, it was Thursday when he went up against an outlaw, which is so. And then Friday, oh my God, he scraped through. Just got through by the skin of his teeth. But look, it doesn't matter if you win by $1 or $1. You win. That's what you're there for. So let's see how these guys get on this afternoon. I'll be keeping an eye on that, and fingers crossed for the Knicks, PB Investing, and D Money. Cool. Right. Let me see. Why fried chicken? I'm not allowed to be. Again, the one thing I said to Tradeify guys when I joined, I'm not allowed. Like, I can't show you my account. I can go through, like we did here, I can go through theoretically what I'm doing in my trades, but I'm not allowed to show you my trades because I'm trading client money. So therefore, I'm not allowed to do that, and therefore, I'm not allowed to be in the Grand Cup because, again, that would show. Again, when you work for an institutional regulated company, you can only trade for them. So I can talk about trading, but I can't actually tell you what I'm doing because I'm regulated. Basically, anyone who I give trading advice to, and I mean like specific, you should buy here, you should sell there. They need to be a professional investor. So again, so I'm not being a chicken. I'd love to have a go at the Grand Cup. I really would. So perhaps I'll get my wife to sign up next year and give her some ideas. Cool. Right. DAX. Let's have a look at DAX. Okay. Let's take it down. So I'm guessing you guys want to see it, no, actually, let's just start out on the 15 because I just want to see there's nothing I'm missing here. You can tell I'm old. I lean in when I'm looking at the chart. Sorry about that. You probably get a view of the ugly top of my head. Right. So nothing there for me. Nothing jumping out at me on the 15. Take it into the 5. Little bit of a trend line there, but I think I'm really forcing that. I don't. Yeah. Well, let's have a look. I'll keep an eye on that. I don't really get excited about that. Looking at the DAX, I think it is. There's not. Let's get it down onto the 1 minute. My gut feel looking at the price action is I would rather be long than short. Perhaps look for a break above this trend line up through these highs, which we've struggled with over the last, well, it's fairly recent. I keep forgetting when I'm on a 1 minute chart. It's just like 5 minutes ago. But yeah, look, on the whole, I'd rather be long of that than short, but nothing. So we can see NASDAQ is bouncing back up a little bit. Again, I'll just leave it. Obviously, it's broken this down trend line. My stop's here. It's a profit cut. Look, I've stolen from 34,549. So I've got a decent amount of profit out of it. So, Coach, when you work for a bank, do you get fixed salary or a percentage? So, in answer to that question, yes, you absolutely get a fixed salary. So, yeah, salary's decent, to be honest with you. They're certainly not bad. In terms of a fixed percentage, there should be. I would say there's always variables within it because what they are mindful of doing, and it kind of works for and against you. They don't like to give you a fixed percentage because typically what they're wary of is that obviously you've got a foreign exchange trading desk, you've got a bond trading desk, you've got an equities trading desk, you've got your options trading desk. So obviously all of the P&Ls are added together, and then if the bank has had a good year, then you will get a decent bonus, and they'll look at who's performed within the teams well based on that big pool. Now, obviously, as I say, if you've had a storming year and another couple of desks have lost money, so therefore the pool is a little bit smaller, that can be really frustrating because you're getting paid less, but you feel you've just done more and you deserve it. But conversely, sometimes other desks have exceptional years and you kind of pull each other up and support each other. But if you feel and this is why do people leave and move banks? Because they feel they're not getting a fair deal. And you can sometimes get individual deals, but typically the banks like to pool it in that way. And as an average, you're always going to bemoan when it's gone against you, but when it goes in your favor, everyone's like, well, there we go. Like goals hit, cool. So Trader Girl, yeah, it's certainly, if it was, let's just see. We'll keep an eye on that. Okay, guys, well, we're coming towards the end of the session. I actually have a work call at 10, so I will be off quite prompt. But any last questions before we leave today? So, guys, all the goodwill behind Nick, D-Money and PB Investing today. Again, I've really enjoyed being on. I apologize, it's a little bit different. I will sort my charts out, that lag. I'm a bit embarrassed by that, so I will get that sorted out for next time. Let's just see how that goes. But we'll cool. I really appreciate that, guys. Obviously, I hope you enjoyed something just a little bit different. Obviously, your number one hosts will be back shortly. But again, just a different perspective, a different way of thinking and looking at the markets. I hope you can all benefit. And as I say, I hang out. I'm always at the New York Open on the Future stream on a Monday. I'm always on. I'll always be on the coaching session, New York lunchtime. Lunchtime on a Wednesday, and payrolls. I'll be on Power Hour this week. Definitely on Thursday. Oh, actually, it might not be on if the guys are away. Again, I need to confirm that. Actually, these things I should check. In fact, sorry, actually, guys, there is no coaches hour this week. So next week, the week after, because everything's been disrupted by the Miami trip, that although there is a stream today, so get yourself there at 1:30, but it's not the typical one. Okay, guys, look, I really appreciate all your winner. We have it, but Bushy, unlucky guy. Well, you haven't been an unlucky guy today. Well done, Bushy, unlucky guy. Fantastic. To hope that changes your luck, and that gives you a nice kickstart to move the week ahead. Okay, guys. Well, I will wish you all a fantastic day. I think I might be back with you on Wednesday, just filling in on the same session. So again, between now and then, have a think about anything that you want to ask me on that session, anything we can go into. Let's just keep an eye. It looks like I'm probably going to get stopped out on this NASDAQ, but again, my stop's there for a good reason. I'll let the stop loss defend the position, and we'll see if that comes down. But look, it locked in money anyway, so we'll see. But okay, guys, well, have a great day. Thank you very much. Take care.